Aloha from Maui, everyone. My apologies about no video lesson yesterday. We did end up losing electricity, as I mentioned in the chat room, that it might happen whenever we get a lot of rain on the west side of Maui. We can't handle it, and electricity did go down. Decided not to make a video. So first, before I go over the long positions from yesterday, when I first showed the market, the SPY had that gap up yesterday, and it looked like that we were just going to have a parabolic blow off top almost move. But instead, we reversed today, and if we fill that gap, I believe that we're going to probably, more than likely, get all the way back here, test that 50-day moving average, recent breakout area. I could easily see us coming all the way back here. I want to see previous resistance become support, but other troubling sides is the NASDAQ. You can see a mini-like megaphone pattern trying to start. If we reverse that gap up here, we'll probably hit this lower line. And if that happens, this one's a bit tricky to figure out. So what I'm thinking of more than likely, let me get rid of that. I don't want that. I want to go back to this, put this one here. I'm thinking right here about a gap fill, almost that 50-day moving average. There's a few gaps in here, along with this one up here. This one filled, so we'll see. I'm thinking that we can come all the way back down here. And since the Russell 2000 chart doesn't exist on Warden, I'll show this one in even larger megaphone pattern within a smaller megaphone pattern. So this one also. So there's a couple of megaphone patterns here overall in this chart, and I do not like these setups. But at the same time, I didn't like that setup back here either. And at first it failed, and then it worked again. So welcome to the volatile markets where we go straight up and straight down. I'd just be ready for that. Now getting to the new long positions from yesterday, starting off with the higher quality ones. Vive already long from back here. I got shaken out sadly here, but I'm still trekking on an end-of-day basis. Good long signal yesterday, but it's a bit of a big candle, volatile candle. So first cut loss level was this low or this low and then this low. Well, following today's heavier volume reversal, I'm now putting my stops into three. One goes here, one goes below this low, and one goes here on VEEV because it's a 2% position, so it's a bit larger position in a volatile stock, so I want to make sure I have my stops tight. And then PCYG was a new long signal. The market would have been up. I'm sure it would have worked. Yeah, it's a little chasing. But to be honest with you, that candle that you're looking at here on March 1st, I wish that was this candle here, but it followed through with that candle. It's a nice 2-day candle, good enough. First cut loss level was the low day of 14.25, next one 13.75 today. Closed below it on above average volume, so it's a 50% sell signal as of today. But I still have my position, but it moved below 13.75 to 13.70, and I'll be completely out. And the high quality long signal, the best one of them all, was a small regional bank, PGC, another thin one. Huge volume surge, as you can see, and then a nice little surge in BOP here with a nice bounce off the 50-day moving average. Today, it pulled back, heavier volume, but BOP is still green, and it didn't close below the open. So overall, the pattern is still true and still good. Then there was, for new long positions, INST. INST was a speculative one. First cut loss level is here, and then I am using the 50-day moving average, but I recommend everybody use this as the second cut loss level. Everything's fine after today. It pulled back even on lower volume, so that's good. And then I went for a swing trade idea in GEVO because it's so oversold. Oversold RSI. It's curling up, coming out of the really oversold levels around 20 almost this time around. And the MACD is already curling higher, not shown on this chart because my technical indicators on Warden is not as good as stockcharts.com. or E-Trader Interactive Brokers, but pretty good signal here. First cut loss level, 97 cents. Second cut loss level is right here, which I think is 92 cents. You can see today, pull back lower volume. Everything is still true, so nothing to really worry about here. And then the one long position that worked immediately was my favorite chart pattern. Don't like to say that I love anything anymore, but this chart pattern is close. If this thing has max green BOP the entire way here, and this price bar comes right off the 50-day moving average, which means this is a little bit longer, this base, then I love this chart pattern, but instead I really like it. Just like CACB, I really like this chart pattern, but I don't love it, but it's damn close. It's one of the closer ones besides MRUS. MRUS worked today, up 11.84%. Now at the same time, CACB worked today. I loved this pattern following this signal right here. See the BOP surging to max green BOP, pocket pivot point signal, huge volume surge. Like I said, I love it, kind of love it. Not fall in love with it. If I fell in love with it, it would have max green BOP the entire way, and once again, this space would be more symmetrical to the previous uptrend and tighter. It wouldn't be like a double bottom base pattern, but CACB is working just like MRUS worked today, so that one was really good, a near 12% gain. But getting away from the new long positions and the ad signals from yesterday, today it's all about hedges. There is a fresh new hedge, FINZ. This only showed up in my tertiary scan due to the well below normal volume that you like to see on anything. This thing only averages 3,800 shares a day, so it's a limit order only. But if you don't want to go that long, you can go FAZ. FAZ, you want to use the high of the day, 1775. But me, I'm looking at fins. I want fins. I'm going to try to get fins. If I get long fins, first profit target obviously is going to be up here. Then these November highs, and maybe it'll try to fill this gap all the way back in November if shit really gets ugly. But fins is the new long position. 1% of my account capital, even though in the tertiary scan it's only supposed to be 0.5%. I want to push it here. I think the market's way too extended. I'm way too heavily long, and I see enough poor moves today, and I've seen enough poor moves in the past 2 or 3 sessions because the market looked like it wanted to break down back on the 28th. But we got that big, huge move and gap up following Trump's speech to Congress. But now it looks like we want to reverse it. So I want to stick with the hedge. FINZ, it's good to go. First cut loss and only cut loss level, 1245. It closes below there, you should be all out. Now for me, closes below 12, moves below 1245. Let's say I have 100 shares, moves below 1245, I'll have 50 shares. And then whatever the new low a day is, the next day that it fails, that'll be my final cut loss. And then that goes to our ad positions, which will be coming up here, what I want to talk about. UVXY is an ad signal. This one was in my ETF scan and confirmed in my price volume BOP surge scan. Using the recent lows here where it lost its green BOP, I got a first cut loss level at 2010. And then I want to give this position all the way back to 1849 before on the end of day signal it's a full sell. Now once again with this one, if I have 100 shares here, I'm out of 50 if it closes below here. Then I'll be out of 25 if it closes below there. Then the next level would be I'm out of 13. Then that would keep me with 12 shares Lex, and then the next stop loss level will be out of 6, then out of 3, then out of 2, then out of 1, and then I would have no more. And that's how I do the hedges, since they historically like to move lower. But whenever they move, they like to really ramp. So that's why whenever it does hit new lows, I try to give it time to come back because they normally do. So UVXY I'm adding to, and then VIIX, why I'm adding to these two? Because they both had volume surges today near clear support levels. Since VIIX never lost its green BOP, my first cut loss level on this one is 584. My final cut loss level, 567 on an end of day basis. Once again, if I have 100 shares, 50 at the first cut loss level, then 25 at the final, then each and every day until I have no more shares, I half it off. And then that goes to this one, SOXX, before I get to it, BZQ. BZQ, went long BZQ here. Somehow I screwed up and put all of my stop below 1220, moved below 1220 here, hit 1190, rallied all the way back up to 1260. Now if my stops are normal, if I had 100 shares, I still have 50 shares, and BZQ is higher. But BZQ gave me a buyback ad signal, gapped up, and I never got a chance to get back in, so I've been watching BZQ the whole time. Well, it worked. Why do I do that? You just saw BZQ, and you're about to see right now also SOXS. Got my first long signal here with SOXS. That means the first cut loss level is 806. If I have all, let's say I have 100 shares, I can't remember. If I have all 100 shares below 806, I'm stopped out intraday today before it reverses and rallies higher. As it is, if I had 100 shares, I can't remember what I had. Don't think I even had 100 shares of this, but let's say I had 50 shares. Got knocked out of 25 of them when it moved below 806, and then boom, look at it come back. So today's definitely an ad signal, pocket pivot point signal right off the lows. It was in my ETF scan and sadly was not confirmed in any other scan. Thought it might make the price volume BOP surge scan, but clearly, after thinking about it, clearly not. It needs to be at least 1.5 times its average daily volume. But nice move off the low, pocket pivot point signal, very, very beautiful. BOP is increasing. So now the final cut loss level is 802, but for me, I have to not only buy 1% of this, or actually it's 0.5% since it was only in the ETF scan. That's right, this is 0.5% of my account capital, but I also have to buy back what I sold off. So it's 0.5% of my account capital, and then if 50 shares or 25 shares got cut out today in the portfolios, I got to add back those shares. So it's a 0.5% plus buying back what I sold. But SOXS, very, very nice off the lows. FINZ, UVXY, and VIIX are the new hedge positions. This market looks weak. I recommend everyone to take it easy out there. Hold off on long positions unless they're beautiful or the market attempts to find a floor. Aloha.